Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, December 23rd, 2008. Well, as we get into the intraday market analysis video here today, I want to talk a little bit about what we've seen this week so far as of going back to yesterday, where the markets were yesterday and where they are today in relation. I also want to cover a few chart patterns that are developing on the chart on the intraday, on an intraday basis, and kind of go over technical analysis and the points of view. I also want to make the announcement that the webinar, again, January 3rd, 2008, it's a Saturday, January 3rd, from 1 p.m. to 6 p.m., hardcore technical analysis webinar. You will learn, talk to the instructor over the internet and everything. Fantastic webinar to learn proprietary techniques on technical analysis, as well as regular techniques that you may not be so aware of. Okay, so that's number one. Number two, let's take a look at what this market's doing on an intraday basis here, and we can look at the Dow trading down about 66 points, NASDAQ trading down 13.5, and the S&P down about 5.5 points. So you can see the market coming off the highs of the day. And remember, this morning, those of you that were aware of the market, we were trading basically flat to slightly positive. We had a little bit of a gap up at around 9:30 in the morning up here. We traded up, down kind of throughout the early morning period, and then we started to cascade to the lower side of things going right into lunchtime. Volume remains very, very light in this market, which has been the case for the last day or so at least. This week, again, it's only going to get lighter. We've done 700,000 contracts in the market right now, as it's about 2:30 p.m. Eastern Time. And what you can see here is some patterns, and I want to show you a couple odds and ends here. Number one, let's use this little bit of a pattern development here, guys, okay? Number one, you can draw a line from this 3 o'clock low put in on the futures and drag it to the low over here, okay? So what you're seeing here is the market making the low here, bouncing up, nice push up there overnight on very, very low volume. Then you create what's called a bullish flag pattern. Bull flag pattern, again, a sideways to lower move off of a big up move with inside bars, which basically is telling you you're going to have another pop in the market. Sure enough, look at where you come into. There's the cross of the 50 and the 20, also called a necktie, and up the market goes, back up, right into the 200 moving average, another bullish in spirit of bull flag, another pop, but really can't get above this 200. Notice there's no confirmation here of a move above the 200. You get a red candle right after the green candle, and it comes right back in, and selling ensues. And you basically get this choppy trading then throughout the morning hours leading into the market open, ultimately pushing up, and notice how it really can't get past and really move up through this 200 moving average. And again, you had a breakout above the 200 here on the intraday, but remember, confirmation, it has to be seen, and in order to see confirmation here of a breakout, you have to get a close above or a move above the high of this candle, and notice the next candle doesn't even get close. So ultimately that's a failure. You see the market move back down, and then notice this line I drew in here on the intraday analysis, where all of a sudden you break down, and here's your breakdown line. You close below. This is a confirmation. As soon as it breaks that level, you get confirmation. Notice one thing here, folks. You get a retrace, but it comes right back up where the high of this candle can't get back above this line. If it did, it would negate the down move, but ultimately it can't. That's confirmation is still intact, and look at the sell-off that you got then off of that. Once you got back into this lower range, you traded sideways. What's this called, folks? Where you have a big down move and ultimately see this big down move, and then you get that sideways upward motion. Well, it's all obviously at this point, you guys should be familiar with this. It's called a in spirit of bear flag, which can tell you that your chances are, and again, it's all about odds here. You're basically like a casino, except you have the odds in your favor if you're a good trader. And with me, obviously, I like to think that I have 80% or better in the ways of the odds in my favor. And depending on how long you've been studying the markets, you can have odds different bases. An amateur is going to have the odds against them, to be honest. 40, 30, 20%. Advanced will have 80%, like I have. A middle ground trader or investor will have 50%, 60%. Ultimately, you want to have the more the merrier in the odds for you. Now, in any case, you see this flag pattern where you get that nice in spirit of bear flag. What you're looking for here is a hit off the 20 moving average, which you get there, and you get a little bit of above, but it just can't hold it. It had such a big move from the lows down here to this that it's just an extended move, and that's something that I should talk about as well, but we'll save that for another video, maybe in the research center. And then ultimately you're starting to fall back down here as that bear flag plays out. Obviously, major support line right here. Notice the lows of these candles across the board here. Notice, where does that candle go? Right to the low, right to that line. And where did this one go? Right to the line as it currently trades. If you get a breakdown, obviously you can look for support at this point down here from that level. This will be support 1, support 2. If we break down that, then there's another story, and we can obviously go over that in the Research Center as well this evening at inthemoneystocks.com, which I encourage all of you to join. One thing I want to announce also is we have a pivot day, a turn date for January coming up, and we'll be announcing that very shortly in the Research Center, which is a subscriber service on our website, inthemoneystocks.com. And our turn dates have been almost dead on. Within a day or two, the move happens, whatever we've been calling for. It's been that way for almost 2 years now since we started this company and started this type of research using our proprietary signals as well as the technical signals to tell us. Okay, so just keep that in mind. Those of you that want to get that turn date, definitely want to subscribe now for the next January period, as there should be some major moves. And one thing I'm just noticing here, notice the market breaking down intraday. You should have a little bit of support there, and look at that. Now it's coming right down to that line that I just drew in as the next level of support, which is what you want to watch for. So first of all, you got a little bit of a bounce off there as it traded up to this point. Now you're moving back into this line, and the question will be, is this a double bottom? Now remember, double bottoms can slightly break down a little bit, but it's all about confirmation, just like we talked about confirmation over here being the key as well. So another story we'll go into, obviously, but I do encourage you to get on board on that Research Center, as you'll just learn so much. These videos I do on the intraday basis are minuscule in comparison. A couple other things I want to talk about. First of all, the USO. Let's briefly touch on the USO. Made a nice low here and actually double bottomed. You can see the move up here. Double bottomed with a pierce, but it closed above, and then it had a nice little move up into that 230 time frame. Has pulled off of it, and we'll continue to watch what this flag pattern gives us. But oil, again, spot oil has closed for the day now as it's past 2:30 p.m. Eastern time. But nonetheless, a little bit of a tail on that daily. You know, it's tough to see down here, but we're still watching that. Really, what you're seeing is major positive divergences. It's just a matter of you need 2 consecutive moves to turn these indicators up in oil, and you're not getting 2 days in a row that are positive in oil for I don't know how long. So still watching that USO, and we'll keep that, and we'll update you guys on our projections in the Research Center as well as the dollar, the gold, S&P key levels on the daily. And again, I don't even go into the daily on these videos, but nonetheless something that's really key, because that's going to be where our turn dates come in and pattern and formation come in for the bigger moves, aside from little day trading moves here on the intraday basis that I'm covering. A couple other things I want to talk about. Number 2, Goldman Sachs. Goldman Sachs, I mentioned bearish pattern formation, or at least resistance right here. I mentioned this a few videos ago right on this day, and look at the pullback you've had on Goldman Sachs, continuing to be dead on there. The dollar and gold calls from last week were dead on the money as well, and the GLD, we can show you, we called for that short right up here. And sure enough, look at that fall back down on the GLD. As again, you should have support right in line here. In any case, folks, have a wonderful day. Join that webinar on our website. Come join it. Sign up for it. It's going to be the one that you're going to remember for the rest of your life and improve your trading tenfold. As well as the Research Center will do that as well. Join both. We will see you soon. Take care.